Hi guys. Today we will analyze waste management stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock had a good overall performance in the market in the past year, but recent evolutions are not positive. The short-term trend is neutral, while the long-term trend is still negative. We need to see a little more continued positive action to make this really interesting. Support level is around $144. Next support levels are around $130 and $123.50. Resistance level is around $156.50. The next resistance level is around $166. In the last month the stock has been trading between $138.50 and $151 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 6% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 112% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Waste Management Company: bad, average, and good. First scenario. Waste Management will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 2%. Future profit margin would be a low, 10%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $87. Second scenario. Waste Management will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 11%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $116. Third scenario. Waste Management will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $162. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 4.3. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Waste Management, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 26. Again, I will use 3 different scenarios for Waste Management Company: bad, average, and good. First scenario. Waste Management will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 2%. Future P/E would be a low, 16. In this case, the fair value of the stock today would be $30. Second scenario. Waste Management will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 20. In this case, the fair value of the stock today would be $44. Third scenario. Waste management will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 24. In this case, the fair value of the stock today would be $63. As you can see, today the stock is overvalued, $146, even if we expect the company's high performance in future. The company has a high level of debt. On top of that, in the coming 5 years, the revenue will grow only by 6% yearly. And the stock is currently overpriced. I will add this stock to my watch list when the stock drops below $100, my buy price would be $80 or lower. Company's strengths. Waste Management is North America's largest provider of comprehensive waste management services, serving municipal, commercial, industrial and residential customers. The company has 5 business segments: collection, landfill, transfer, recycling, and other. It is also a leading developer, operator, and owner of landfill gas-to-energy facilities, and the largest recycler in the U.S. The company operates 4 renewable natural gas plants and expects 2 additional plants to come into service in 2022. It has the largest trucking fleet in the waste industry. WM is using new technology to automate sorting at materials recovery facilities. These investments have reduced the cost of recycling services, improved the quality of the delivered product, and increased the amount of material recycled. The company has a growth by acquisition strategy. With increasing packaging trend, garbage disposal has enough future scope for sustaining. Waste-to-energy is the new area of waste management with opportunities for research. Consistent demand for new ways to recycle and reuse waste. The company's return on assets of 6% and return on equity of 25% are amongst the best returns of the industry. It has a profit margin of 10%. This is amongst the best returns in the industry. Risks. The company has a high level of debt and could expect problems in meeting its short-term obligations. WM faces risks from changes in short-term interest rates, as much of its debt is variable rate. Risks include rising fuel and other costs, weaker than expected growth in the housing market and U.S. economy, a decrease in recycling prices, a lower customer retention rate, and an inability to raise prices to meet return on invested capital goals. Lawsuits regarding improper waste disposal has hurt the reputation of the company. Numerous government regulations. Hurricanes also raise the risk of damage to company property. The company is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow only by 6% yearly. The earnings per share will grow by 12% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.